I believe Tesla insurance could soon disrupt the $300+ billion insurance market in the United States. Let's talk about all the new information we have regarding Tesla insurance and also talk about how it might disrupt the insurance market as we know it. I'm Jonathan Stewart and welcome to Cleanerwatt. According to ibisworld.com, in terms of revenue, the size of the insurance market in the United States is somewhere around $308 billion. Last year, Tesla launched their first insurance product, which is available in California only, and soon an improved insurance product will roll out to more states and I'm sure eventually globally. Later on in the video, we're going to dive into the size of the insurance market in the United States, and I'll talk about just how much it'll take for Tesla to disrupt this market. But before we do that, I want to dive into some audio clips from the recent Q2 2020 investors conference call for Tesla, where they revealed some details about Tesla insurance, more than they have in past conference calls. After these clips, I'm going to discuss 5 key advantages that Tesla has with their insurance product, and I'm going to show you how this will potentially allow them to completely disrupt the insurance market, at least in the United States and eventually globally. In this first clip, you'll hear the CFO of Tesla, Zachary Kirkhorn, and Elon Musk at the very end talk about their current insurance product and the coming insurance product, their Telematics product. They'll also talk about the importance of data.
Currently, we have a product in California, as I've described before. It's been quite well received, and I would largely describe it as a fairly standard insurance product with elements of it that are unique to our cars. So you can think of it as a version 1 of Tesla insurance.
Version 0.9 in the beginning at least.
0.9.
Yeah.
What we're working on now is we can call it version 2 or we can call it the first version of our telematics product.
Yeah.
And so really ultimately where we want to get to with Tesla insurance is to be able to use the data that's captured in the car, in the driving profile of the person in the car, to be able to assess correlations and probabilities of crash and be able then to assess a premium on a monthly basis for that customer. And what makes this very exciting for us is the amount of data that is available with the customer's permission to use is not available in any other product or any other vehicle in the world. This gives us a unique advantage in terms of information.
Yeah, I mean, at the heart of being competitive with insurance is what is the accuracy of your information.
Here's another clip where Zachary Kirkhorn also reveals when they are planning to expand Tesla insurance and especially this new telematics product to more states rather than just being in California alone.
And where we are now is nearly complete with the risk and cost analysis associated with the first version of the telematics product. We hope to be filing that in a handful of states with regulators very shortly. And assuming that regulatory approvals go smoothly, we hope to have this in a handful of states by the end of the year. And then we'll continue to file for approval in additional states. With regulatory approval there, we'll continue to roll this out nationwide as quickly as we can. And then that product, as we continue to collect more data and we iterate on it, there'll be version 2, version 3, etc., as we continue to refine that.
The more data an insurance company has on their customers, the more accurately they're going to be able to assess the risk of that customer and the likelihood of having to pay out on claims for wrecks, accidents, etc. So if insurance is all about data, Tesla has a big advantage because Tesla has more data on their fleet than any other car company and definitely more than any other insurance company will. The vast majority of Tesla's fleet has all the sensors and hardware necessary for full self-driving, and these sensors and hardware also give them a key advantage when it comes to data. Not only does Tesla have this data, but they know how to use it because they've been analyzing this data for their Autopilot and full self-driving programs for a number of years, and so they have access to a long history of data, they have access to current data, and they really know how to analyze it and make the best use of that data. Now, to be fair, other insurance companies do have access to some of the same data, it's just not of the same quality. According to this US News article that was published February of 2018, entitled "How Do Those Car Insurance Tracking Devices Work?" quote, commonly cited types of data include when the car was used, driven, and time spent driving. They also want to know how fast a driver typically drives and any incidents of hard braking, both of which are indicators that the driver takes risk and doesn't pay attention. That article also went on to talk about some newer technology found in newer vehicles. Quote, in newer vehicles with high-tech safety features such as automatic emergency braking and forward collision warning, the insurance tracking devices can capture how many times they are activated and report that information back to the insurer. When linked to mapping data that shows what the speed limits are and what other traffic controls exist on the streets you drive on, can indicate whether you are speeding or rolling through stop signs. GPS information about whether you travel into areas where there are a higher risk of accidents or car theft and how much you drive at night can potentially show the insurer a pattern of risk. So as these articles pointed out, and as I've mentioned, other insurance companies do have access to data for their customers if the customers opt to give that data by sticking a telematics device in their car. But even with all this, no insurance company has their entire fleet with this group of sensors, nor do they have the amount of data on their vehicles. So the first key advantage that Tesla has is that they have much better and more data. The second big advantage that Tesla has over other insurance companies is the ability to break even on their insurance product if they want to. It's very possible that Tesla will choose to use their insurance product as a tool to sell more vehicles and not necessarily a place to make more profit. We do have a pattern for this because this is similar to how they run their supercharging network. They could raise the rates on their supercharging network and make a lot of money from this network, but instead they chose to make this a convenience factor and a reason to buy a Tesla vehicle. I believe they're going to make rates as low as possible and make sure they have enough to cover claims, but I don't believe they're going to attempt to make a big profit off the insurance product. The third key advantage that I believe Tesla has with their insurance product is the fact that they have a 360-degree view with the cameras surrounding the car so that they can prove who is at fault in an accident. They can go back and review video footage from all angles around the car and see what occurred, and if the Tesla driver is not at fault, they have really easy proof, so the other insurance company has to pay for it. With this ability, Tesla will be able to reduce the amount of claims they have to pay out because they will only pay out on claims where the Tesla driver was truly at fault. The fourth key advantage of Tesla's insurance, this was revealed in the recent conference call, and I'll play this clip and then we'll talk about it.
It's also actually very helpful for us to have a feedback loop to see what is driving insurance expense. A lot of it is just, it's like, like little fender bender, and the net fender bender, because of the way that the body collision repair is being done, cost like $15,000 or something crazy. And we're like, well, how? And then we can actually adjust the design of the car and adjust how the repair is done to actually have the fundamental cost of solving that problem be less.
So as was mentioned in the conference call, Tesla in the future, they plan to design their cars in such a way that they are easier and cheaper to repair. This, of course, is a big advantage because no other insurance company is manufacturing cars, and so they cannot control the cost of repairs, and they can't control the way that vehicles are built. When Tesla fully rolls out their insurance product, it'll be to their advantage to make sure that their cars are easy and inexpensive to repair. The fifth key advantage that I believe Tesla has is that they currently have the most advanced and the most effective safety assist features and autopilot features built into their cars. And this isn't just my opinion, the data backs it up. According to the Q2 2020 safety report, with autopilot engaged, there is one accident for every 4.53 million miles driven in a Tesla vehicle. With autopilot not engaged, but with their built-in safety features working, that was one accident in every 2.27 million miles. And according to the NHTSA, the average in the United States is one accident for every 479,000 miles. And that's, of course, all vehicles collectively. So the data shows that clearly Tesla's safety assist and also their autopilot system does reduce substantially the amount of accidents and wrecks, and that will of course reduce the amount of claims and will thus allow Tesla to have a much more affordable insurance product. So now that we've covered the 5 key advantages that Tesla has with their insurance product, let's talk about just what it might take for Tesla to disrupt the US insurance market. According to the National Association of Insurance Commissioners, here are the top 10 insurance companies ranked by market share, and this market share is based on the premiums that they received in 2019. You can see there the top 5, State Farm has 16%, Geico has over 13%, Progressive right around 12%, Allstate around 9.3%, and USAA right around 6% of the market. But I believe to get a better picture, we need to dive deeper than just the premiums received in 2019. I want to talk about how many auto policies and how many vehicles are insured by these top companies. If you go to Geico's website, according to their timeline, quote, Geico passed 17 million policies in force in 2019 and now insures more than 28 million vehicles. And since Progressive is a publicly traded company, I went to their annual investors report and found out that if you collect their agency and direct auto policies, this number is somewhere just under 15 million policies. So based on the best data that we have here directly from these companies, here are my estimates for these top 3 companies. So the numbers that we are certain about are that Geico has 17 million policies and they insure somewhere around 28 million vehicles. We know that for a fact. We also know that Progressive's auto insurance policies number somewhere around 14.9 million. The other 3 numbers that I've starred are estimated based on some of the ratios here from this data. So based on market share, I estimate that State Farm has somewhere around 21 million auto policies, and based on the Geico ratio, 17 million policies to 28 million vehicles, I estimate that State Farm insures somewhere around 34.6 million vehicles. Using the same ratio, I estimate that Progressive insures somewhere around 24.5 million vehicles. So the top 3 insurers in the United States are very large, but the numbers aren't as large as it might seem. We're talking here about breaking into the top 3 with just a little bit over 20 million vehicles insured. Once Tesla's telematics insurance product really gets rolling, I believe it's going to be much cheaper than the competition, and they will have a huge take rate for Tesla owners. If you could get insurance through Tesla for somewhere around half the cost of a traditional insurer, of course you're going to go with Tesla insurance because it makes the most sense financially. And if Tesla continues to grow like they are with their number of deliveries, and I believe they will with all the new factories they're building, and they have a high take rate, Tesla could, in less than a decade, become a leader in the insurance market. Here's a conservative estimate for what Tesla's car deliveries could look like for the next several years. Of course, here in 2020, I believe they will deliver somewhere just north of 500,000 vehicles. 2021, that number could be over 760,000. 2022, 1.25 million. 2023, over 2 million. 2024, 2.5 million. 2025, 3 million. And if they continue to grow at 10% growth, 2026 through 2030, that would mean by the year 2030, they could potentially have somewhere around 31 million Tesla vehicles on the road. With 31 million Teslas on the road, and with a good majority of these opting for Tesla's insurance product, this would clearly make Tesla a leader in the insurance market in less than a decade. This would completely disrupt the insurance market, and I believe we would see some of the small players go out of business. Other companies will be forced to reduce their prices to try to compete, but I believe they will not be able to reduce their prices as low because Tesla has the advantage, once again, like I mentioned, the ability to break even. They don't have to make a huge profit on their insurance product because they're going to be making a profit off selling vehicles, and also I believe their robo-taxi network, full self-driving, and the software related to all that. Now, in case you think I'm thinking too big for Tesla insurance, here's what Elon Musk had to say about their plans for Tesla insurance.
And on the insurance front, I want to be clear, we're building a great, like a major insurance company.
So I believe it's very likely that in less than a decade, Tesla could break into the top 3 insurance providers in the United States and possibly globally because they'll have so many vehicles on the road. I believe their insurance product will be much less expensive, it'll be far superior, and they'll have a huge take rate from Tesla owners because of these advantages. Thank you so much for watching this video. I hope you enjoyed it and that you learned something as well. If you're not already subscribed to the channel, please consider subscribing. And if you do subscribe, if you click the bell icon, you'll be notified when new videos are published. Also, if you did like the video, please consider clicking that like button because that'll help other people find the video as well. Here at the end of the video, I also want to thank my Patreon supporters, which support me every month and help me bring this content to you. If you'd like to find out more about the Patreon community that I've set up, I'll put a link in the description below. Thank you so much.